Welcome to another episode of the show we affectionately call Think with a Drink, though we should probably be, have some sort of a subtitling like, can I talk about anything else except for money?
Yes.
I don't want to talk about money, please, something else. That's what Think with a Drink is really meant to be. It's meant to be a conversation, make it a little bit more casual, a little bit more relaxed, a little bit less stress and anxiety producing that happens whenever we sit down with folks and talk to them about their money and their finances.
Right, but they wouldn't be watching our show if they didn't want to know something about money.
If they wanted to know something, that's a good point. So this one is more of, as we're gearing up for tax season, which, another fun thing that everybody likes to talk about. Yay, taxes, right?
Happy New Year.
But taxes, this is, what to do with the tax refund. And part of that is, is it really a good idea to get a tax refund? And, what are some of the things that I should be doing with it? What are some of the things that I shouldn't be doing with it? And how does that all work together? So that's sort of what the episode is about. Again, taxes, everybody's got to go through it. So a little bit about us. My name is Tom Alessi. I am the president of the Aries Foundation. I've been in financial services now for 25 years. Those letters after my name just let you know that I am a certified fiduciary, which means that anytime I am sitting down with anyone and giving them any guidance or advice, I am always acting in their best interest. I want to bring my vice president, Craig, if you can introduce yourself.
Sure. So I'm Craig Richardson. I'm the vice president of the Aries Foundation. I've been in financial services a little over 20 years now, and I specialize in working with individuals and families to help them to find their financial goals and have a better relationship with their money.
And so the Aries Foundation for Financial Education, you can find us on the web. It's ariesfoundation.org. We are a 501c3 nonprofit. Our mission, the mission entirely of Aries, is trying to help everyone have a better relationship with their money. Because whether you realize it or not, you're in a relationship with money. And it's just like every other personal relationship in your life. There are behaviors and triggers and things that cause us to get a little crazy sometimes, to get a little irrational when we deal with our money and our finances. That's all myself, Craig, the rest of the Aries team that we try to do is try to help everybody sort of take a step back, take a little bit of that emotion out, because we get very, very emotional when we deal with our money and our finances, and ways that we can handle that. And so one of the things that we try to do is, the reason for this show is to have a little fun with you, and the whole point of Think with a Drink. So for us, this is meant to be casual. It's meant to be relaxed. It's meant to just be a conversation. And with that, we're going to pour ourselves something to sip along with as we talk about, taxes. Just something everybody wants to talk about is taxes. In this case, what we're drinking, this is called Fest beer, but that's a bear on there. If you want to pull that up, you can show the folks the Fest beer. So this is an Oktoberfest, right? So, Oktoberfest beers, these are meant to be enjoyed when if you think of Oktoberfest, you think of Germany, what are you thinking of? You're thinking of pretzels, you're thinking of pork, you're thinking of, those barbecues and that type of thing, sausages. So that's all of the stuff that you're really thinking about when we're getting to
Health food.
No health food here. In terms of how an Oktoberfest, a Marzen, as they are also referred to, dealing with all of that. So, cheers. Skål. All right, so let's get into the whole idea and concept here of what we're going to be talking about, right? So if you just want to bring that up, right? So the first question is always, should you want a tax refund, right?
Maybe.
Maybe, that's a good one, maybe. What happens if I get a tax refund, and we're going to just call it making bad choices with the tax refund that we're getting? What are some, let's call them better strategies, better options, better choices? And then, how do I, if I decide, well, I want to make a change, what are the steps? What do you do? How do you figure that out in terms of making a change? Because that comes up a lot. We get asked these questions all the time, like, well, what do I do? How do I change that? How do I make that happen? All right, so let's start with the first one, which is, is it a good idea to get a tax refund? That whole woohoo, I got
Yeah.
a tax refund, right? Is that a good idea, right? So let's just say, as Craig said, maybe not necessarily the best thing, right? And we'll go through in the next slide with some of the reasons for it. But the idea here is, whenever everybody thinks about it, I'm getting money back from the government. This is great, right?
Yes.
Hey, they're sending me money, or I'm getting this much on my return. Well, so there are a couple of things with that, like when we deal with it, and the steps behind it, and to be thinking about this, and to realize that's not really what's happening.
Well, you're getting your own money back.
You're getting your own money back. So if we go to the next slide, right, we can talk about some of the reasons why this may not be the best idea, right? So the first thing is, this is your money, right? You are giving a loan to the government, and the government is not paying you for the benefit of using your money in the time frame that they had it. That's an interest-free loan to the government.
Which, why not? I'd take that.
Oh, the
I'll take an
government would,
interest-free
sure.
loan, yeah.
they want it all the time. One of the other things is, because there is nothing that gets paid on it, you are losing out to inflation. Your money is being held by the government and then given to you at tax filing time. You do not get any inflation hedge on that. So whatever your money was, it's now lost, it's behind. And whatever number we were at, certainly, as Craig said, it averages out over time. But that number is usually somewhere between 3% and 4%.
So your money's less valuable than it was a year ago.
It's less valuable by the time you get it. So if that return, if you got it over $1,000, right, it's actually only worth, $950.
70,
Yeah, right. Sorry, I was sipping. I had to do that. I was just, in terms of it,
It was a dramatic pause.
Yeah.
That's what.
Can you bring the slide up again now that I'm sipping in terms of dealing with all of that, all right, so to just walk through some of this, and we don't mean to be judgmental, let's say.
Yeah.
The whole concept there of the one that says you may spend it unwisely.
What are you, Indiana Jones?
We did, yeah, I know. We've chosen poorly. It did not say poorly. We said unwisely, right? That's one of the concepts that can happen with that. We'll talk about that in a couple of slides in terms of some of those things, what happens and the way that works. But the other one there is that whether or not you actually need the money. Right? Because what happens is, this is now money that's being taken out of your paycheck. The government is then putting it aside and giving it back to you at a later date. But what happens if you need to spend the money now?
Yeah. Well, and sometimes you have to look at, do I adjust that so I have more income coming in and less taxes coming out?
Right.
Right. It's hard to do that, say, in the first year you're working.
Oh, yeah.
Right. But after you've worked a couple of years, you start seeing, what's going in and what's going out. The perfect balance is you don't pay anything in, you don't get anything back.
You got zero.
Right.
Right. And that's ultimately the target that everybody will talk about, that in terms of what you should shoot for and how you get there. But this is the concept of why getting a tax return may not be the best thing, because, again, think of it, it's your money. And if I'm struggling, because we know there's a lot of people out there who are going paycheck to paycheck, week to week, month to month, well, you're giving the money to the government. Well, it'd be better off in your pocket than in their pocket.
Yeah, I'd say, sometimes this is a little bit of a, based on the individual, right? Because I've seen some people that, they get the refund back, and what are they doing? They're catching up on bills that they had overdue, or, so it's kind of like this forced savings account.
Well, we'll talk about that. We'll talk about that when we get to be a good thing, right?
Okay,
So right now it's a bad thing, right? In terms, or why it may
Why are
not
you
be
backwards this time? Now I got to talk bad first? Okay.
Well, the whole idea of why, right?
Okay.
In terms of that. So let's go to the next slide. Greg wants to talk about why, so, how it can be used for good.
There
right?
it is, forced savings account, right there, almost like they're
you
playing
knew
it.
that was coming in terms of dealing with it. So yes, for somebody who's not very good at savings, right, then, all right, it's a forced savings account, like Craig said. This is money that I know is being taken out that I cannot spend, I cannot blow it. I'm going to get it because that's generally how, as Craig said, over years of working, I know this is what's going to come to me. So I have this forced savings that I can then plan for, generally that I've got the same amount that's probably coming out, because as long as my income stayed the same, my base stayed the same, I'm pretty much okay there.
Yeah, absolutely. The other thing too is, what is your income source? Right? Are you just getting a regular W-2 income, or do you have a small business? There's other things that affect what you're paying in taxes.
Correct. Right. Well, that's what I'm saying is this is in that static of I know what my tax
W-2,
W-2 and that type of thing.
The regular grind is what you.
Yes, in that respect. But part of the idea here with that is that on the flip side, from our perspective, you're also sort of, besides the forced savings, you're sort of limited to what you can spend.
Yes.
Because now that money's no longer available to you, so that I'm living beyond my means gets a little bit tighter. And that's where people get a lot of trouble is, and that's why we say, hey, it may not be a good thing because this is your money and you want to spend it, but only if we're, and forgive this, spending for good, not evil.
Well, like I said, I guess it depends on if you're living within your means in a typical situation.
Right.
Right. And then all of a sudden you're getting a tax refund. You say, you know what, I'm going to use that tax refund and I'm going to go on a vacation.
Right.
Well, as long as it's not affecting other things in your life, you've got some emergency reserves put away, you've done all the other things, then yeah, why not? Why not? It's kind of, you forced it, it's your money, you saved it, and then you're using it for that purpose. And something, like I said, people plan that every year. They know they're going to get that refund. They know about what it's going to be.
Right.
And so that's part of their overall strategy.
Yeah, no, and we get that, and like we said, we don't mean, we're not trying to be judgmental in terms of dealing with it, but it just a lot of times what happens is we see it. Again, I don't want to use the term unwisely, I guess is the best way to say that, right? In terms of going through it. And we're going to go through a slide that'll have all of that. But just backing up the whole concept, if you're somebody who knows I'm not very good at saving, right? I don't do it well. I don't have a lot of money in the bank. This is something that I am now being forced to save. Then it's a very good thing. Then this makes sense.
Yeah, I'd say, the unwisely part would be the people who say, I can give you a loan based on your tax return.
Oh, well, no, we'll talk about that. That comes up. So
I thought you were here already.
No,
Okay.
we're not there already.
All right.
No. We'll get to that.
Well, you were talking about unwisely, so I thought.
Yes. Well, but but that's part of this, right? This whole idea and this whole concept and the conversation that says, okay, we want to make sure we understand, because a lot of times what happens is somebody gets it and then, chaos ensues in terms of with what they're doing. And so next slide, because we'll go there because Craig really wants to get into this one.
No, I mean, I'm trying to use it for good. I'm just saying don't give it away.
Well, so that's when your refund goes awry.
When it goes awry, there you go, yeah.
Right? And so one of those is I'm using it to purchase something that I really can't afford, right? I made a down payment on, maybe it's a car payment, maybe it's something, I've used it to pay for something that was beyond my means, my regular monthly spending, because I got this money. Hey, now I can buy this thing. Yeah, I gotta have monthly payments that go along with it, but that gets us into trouble.
Well, or like you said, you're using it as a bailout tool at the end of the year.
Oh, right.
Right?
Yeah.
I've racked up all this debt, but it's okay because I'm going to get my refund and then I'll just pay it all off. Well, it's your money, but you're not really living within your means if that's the case.
Correct.
It's not a windfall if that's the case.
Right. And that's the thing where it comes into, and again, I've said it a couple of times with this because I feel it sometimes comes across as judgmental on our part when we say it.
We're drinking beer, giving you money about advice. How judgmental can we be?
I don't know. But so the concept there is that spending it on lavish or entertainment purposes, right? So like you said, maybe planning the family vacation because that's the thing that we want to use it for. I don't consider that lavish or outside the scope.
What would be lavish?
Well, so lavish would be like, oh, hey, I want to take a whole bunch of people out, or I want to spend it on this item that I don't really need, like a big screen TV or something like that, where I just just because I got this money, I can buy this thing that I didn't really need.
Well, I think the lavish part comes into is people get it in their head that this is money that the government gave me.
Correct.
So I didn't earn it. It's a free ride. I'm going to do whatever I want with it. You got to realize you can do whatever you want with it. It's your money.
Right.
It's just your money getting it back to you. So if you want to go out and blow your money, go ahead, but don't look at it like a free ride.
Right. Don't look at it like, hey, this is a windfall. This is something that's just come to me. Now I did not expected. Hey, I didn't have this money.
And that's why people will say, well, I'll give you a loan on that tax fund that's coming in.
And that's what's on there.
Because it's not really my money anyway.
Right. So that's one of the things. Like, don't, again, try not to get involved with any of these services that are offering you, hey, we'll give you an advance, or we'll let you have the money before the government gives it back to you, type of thing. Because inevitably there is always a charge, there's a fee, there's a service.
Right. So not only did you lose money because you gave an interest-free loan to the government, then you paid interest on your own money because you couldn't wait another month to get it back.
Right.
And most of the time electronically, you're getting it in 2 weeks now.
Yes.
So how much interest you paying for 2 weeks on a loan?
Right, and that's so one of the things with that, and if you just want to bring up the slide again, just so everybody can be clear in terms of what was there with those advanced services. They come up all the time. I think every time you do a tax return, it pops up on the screen.
Yeah, would you like your money now?
Yeah, right. Get it fast. Get it now. Again, it's just a cautionary thing from us when we talk about this with anybody. If you're going to do it, just make sure you understand, you've read the fine print, you know what all the details are, and you're comfortable, like Craig said, having to pay a service fee or interest on money that was already yours to start with, that you didn't get any interest or service lien on, and now you're paying additional costs to get it sooner.
You already waited all year. What's another 2 weeks?
Exactly, in terms of going through it. And then the last one on there is really for us, because this is more about who we are and what we do, which is the idea is I just spent it. It just came in and I just spent it. Now, if you, as Craig said, if you want to blow it on something, that's fine, so long as you had an idea of this is what I wanted to blow it on.
Well, it shouldn't be your safety valve is what I'm saying. If you got everything else under control, you're living within your means, everything else is good, and as far as you are, this is for savings that came back to me. If you want to save it and continue to save that money, that's great. If you say, look, everything else is cool, it's good, this is extra money I wasn't expecting, and sometimes it may happen. Let's say you had a kid this year, you got a write-off you weren't expecting.
Right, you didn't plan on it, you planned on the kid.
Well, your kids went to school and you got to write off on expenses, or you got something you weren't expecting as money coming back.
Or that hadn't happened over the last couple of years, so now you got this.
Accentuated, right? So yeah, great. But if you are constantly using that money to catch up or to repair the house, I can actually now fix the porch.
Yeah.
Because that's stuff you're not budgeting or planning for on a regular basis, then you want to go back and adjust what you're doing on a regular basis.
Right. All right, so next slide, now we're going to put it to good, right? Let's use it for good in terms of this. And just because Craig just happened to mention it, home improvements is on the list, right? Because that's upgrading to the residents. That's improving the house. That's
planned improvements.
Yes.
Right?
Yes.
But if something is an unplanned, like your furnace blew up and you're going,
that, yeah.
I don't have emergency reserves, I'm waiting for my tax refund to come in.
Correct.
Then you weren't really building that into your budget. But yeah, if you're taking money and you're putting it into home improvement, well then the value of the house goes up, right? It's an investing in yourself. So that's a good thing.
And that's really the concept here when you look at these strategies, right? So the first one on there is debt reduction, because let's face it, debt is a cost. Debt is weighing us down. Debt doesn't allow us to do and plan and save for some of the other things we wanted to save for. So if I have debt, that should be the first place that this money could go towards.
Well, as long as your debt isn't revolving. I got rid of it, and the next year I did the same thing, and next year I did the same thing.
I'm going to be in a hole. I'm going to turn around, and the next week I'm going to get back into it.
Right, but everybody gets in a tough spot at some point, and then you got to try to get out of it. And if you get a little bit of windfall that can get you back on pace, back where you need to be, then that's fantastic.
Right. And along with that, hand in hand, is the idea and the concept of creating an emergency reserve account. We know the statistic right now is that it's like 40-something% of the population doesn't have $1,000 in the bank.
Right.
This is money that's going to come to you that's yours, that now can just say, I'm not going to spend it.
Okay.
I'm going to put it into this account. I'm going to create this emergency reserve fund because we know stuff's going to happen. You know, the car's going to break down, the pet's going to get sick, something's going to happen, and I've got to have money set aside that I can tap into.
Yeah, so we just went through New Year's. If one of your New Year's goals was actually create that emergency reserve, this is a great place to start.
Right, right. So it's a way to get that funding going. You know, the other one on there is to start investing, right? If you don't have, if you've got emergency reserves, now I can start to say, all right, now I want to start investing. I want to create an investment account. Maybe it's a Roth IRA or something that you want to open up, but I'm now using that money to start building for something into the future. Whether it's near-term future or long-term future is a different conversation.
Get back some of that non-interest loan I gave to the government.
Yes, try to get some of that interest returned to me that was mine to begin with in terms of dealing with it. And so just if you can, just pull the slide up again one more time, just so everybody can see that, right? And so the last one on there, you know, again, this is another of those, like, outside the box thinking of what, you know, a good use of a return. But protection planning, you know, for us, that's one of those that comes up. I mean, I don't know what the statistic is, and you might have it, in terms of the number of households that are underinsured.
Probably
right?
85%. Yeah.
Right? And so if it is a conversation, you know, if it's something that's been kicking around and like, hey, we really should have, whether that's life insurance to cover for the beneficiaries, whether that's disability income protection, because if one of you gets hurt or sick in a 2-income household, how are the bills going to get paid? Those are conversations that really should take place. And again, if this is viewed as, like Craig said, this windfall of money that's come in, well, all right, now is an opportunity to start building the plan with that. And that's really the idea here in terms of thinking about how am I using this money?
Yeah, you know, I know too, protection planning is never a fun conversation. Even me, I don't like talking about protection planning for myself because it means something bad might happen, right? And if you're living paycheck to paycheck or just barely getting by, and now you've got this extra money come in, it's like, wow, now you want me to use it to give it to another insurance company again? Right. Gotta pay enough insurance between auto and home and all that kind of stuff. But the issue is if you are living that tight especially, can you afford to be out of work?
Right.
Can you afford to be sick? What happens if your significant other passes away and you're dependent on their income? What happens to your kids? What happens to your home? So sometimes it's even more important to make sure you've got this stuff in place, even though it's unpleasant, even though it's not as fun as a TV to buy, right? Or a trip.
Right, or Disney.
But a necessary evil if you want to make sure things continue to go as smoothly as possible.
Yeah, absolutely. And that's why it's some of those conversations. So next slide in terms of dealing with, you know, so, you know, the tip there really is to determine whether or not it's right for you to make this change. Right? So is this something that makes sense? And like Craig said, you know, ultimately the goal here is I would like to be at zero. I'd like to owe the government nothing and have them pay me nothing, because that means I got all of my money that I should have.
And gave them no loan.
I gave them no loan, and I didn't have to pay them anything. Now, you understand that as you're playing around with this and going through it, you can walk into that situation that, hey, I made a change on this, and now I owe the government money at tax time. And a lot of people get offended by that. They're like, hey, wait, I had to pay money this year.
Well, you know, just the opposite works too. Let's say, you know, you are in control of your finances, you know what's going on, and at the end of the year, you had to pay in as opposed to getting it back. Well, as long as you pay in on time, you got an interest-free loan.
Correct.
But don't abuse that. But I'm just saying, make it work for you.
Right. That's a way to deal with it. So the next slide really just talks about, you know, should you be doing that, right? You know, how do you make the adjustment on it? Because it's something that you file with your employer in terms of going through that. And I'm actually going to skip forward here because I think the next slide is really a little bit more impactful, because there is actually a calculator, an estimator that you can use. It's at the IRS.gov website. And that line across the top, that'll take you, you know, that just directs you where you can go for it, but it's just the withholding estimator. And just want to make sure that you're using the IRS.gov one and not somebody else. Yeah, you want to just make sure you're on the right website with that. but it will walk you through and go through, because this gets asked a lot. Well, what should I do? Should I be 1? Should I 2? Should I claim
Zero,
this? Should I claim
right.
that? Blah, blah, blah. And this way you can just plug in your specifics, and it'll give you your details and tell you this is where you come out in terms of it, and getting you to that close to zero number, right? And then again, not mean zero in terms of what you're claiming, but zero what you would owe. Like either side of that, $100, $200, okay, that's fine, right? You didn't really play one way or the other in terms of it. But, all right, if I had to write a check to the government for $100, okay, I'm doing it. Or if they sent me $100, like we're on either side of the coin, if you will, right? You're not really way over the line one way or the other with that. So I think that's what you really, again, unless you're somebody who really needs this forced savings habit, this idea of this money, and I've used it for something that I'm planning for, like Craig said, that planned home improvement project or something.
Right, and if you're using a professional tax advisor, whether that be a CPA or a bookkeeper, they should be able to give you that advice too. They should know exactly where you fall from last year's taxes and give you any adjustments they think should be necessary for this coming year. And they can tell you how to walk through that. It's basically setting up your W-4 with your HR department, your employer.
Right, and then that just takes care of it. So that's how you would do it in terms of going through it. Again, this is all individual for everybody in terms of how you are, how your family is, what you're spending, what your needs are, what works for you, how you've been using it. But it's just, it's really more of taking that step back, especially as you're going into and putting your tax returns together for this year, and where that's going to come out, as you plan for the year ahead. Right. Does it make sense for that?
And if you really don't know, Aries Foundation is a nonprofit organization.
Next slide.
No, just kidding. No, we are nonprofit, but.
Yes, right. So one of the things you want to do with this is you want to review last year's tax return. Right? You want to go through and say, all right, what did I have last year? Like Craig said, maybe this year there was, in the prior year, maybe there was an unexpected thing that happened, whether it was birth of a child, whether that was, you bought a house or something that you qualified for more. But otherwise, you'll probably be within the same realm, depending on where you're at. Compare it from last year to this year, and then make the decision and the determination, should I make a change going forward from here? And, really that's the idea with this, is to figure out what that works and whether or not it makes sense for you, and then have the plan so that you're able to implement that and do something with it going forward, because it's all about that. It's all about making sure I've got that plan in place, and this is what I'm going to do with that if I get this money.
Right.
All right, so next slide. So as Craig mentioned, we are a nonprofit organization. We are here to answer questions. That is the idea. For those of you watching, if you want to pause the screen, take out your phone, shoot the QR code. That's going to open up our calendar. We're happy to have a conversation. There's never a cost. There's never an obligation. We are here just to answer questions, offer a little bit of guidance, try to help you along the way. But that is the whole idea and concept behind the Aries Foundation. What can we do to try to help it make it a little bit less stressful, a little bit less of that anxiety when it comes to money and finances, especially when we're dealing with taxes, especially if you ended up paying more in taxes than you had planned for.
Especially if you were drinking while you were doing your taxes.
Well, yeah, we don't want to do that, right? Not doing that as far as going through it. But the concept there is, all right, so maybe I ended up paying more. This is all the show has been about, a refund, but what if it was the other way around? What if I ended up paying $3,000, $4,000, $10,000 more in taxes than I had originally planned for? There are ways to deal with that as well. It's a whole separate show. You can check our library. We've got conversations on that as well. Next slide. So one of the things you can do for us is you can, I don't know, whatever they do, follow us, like us, check us out, LinkedIn, Facebook, Instagram, YouTube. Do I?
Move in?
No, I don't know what that is. But you can always just email us at info@ariesfoundation.org, and we say, Skol.